especially after the last few weeks. I know there's a lot of fear, uncertainty, and doubt evolving in the world out there. But we're doing a lot of original research. We have a 5-year investment time horizon. And we are truly excited about the opportunities that the last few weeks have presented us. Electric vehicles. We expect unit sales of electric vehicles globally, including China, to compound at an 82% annualized rate during the next 5 years. Most people, when they see a number like that, they'll just say, I don't believe it. It's not possible. And the reason for that, the reason we face that skepticism often, is because of where the automobile industry is right now. It's very mature. It's not growing. In fact, we believe it has peaked. And that means all cars are in secular decline if we are right, that we are moving into more of a ride sharing, both human driven and autonomous during the years ahead. So this idea that electric vehicle sales could grow at an 82% annual rate, just not going to believe it. And so that skepticism festers, especially, I would say, among institutional investors whose analysts on the auto sector, for example, are mostly value analysts. So there are a lot of those disconnects in the world that are creating great opportunities for us.
Hi guys, welcome back to my channel TechFit, and this is Carlo, and today we are looking at stock price forecast for Tesla in the coming future. Let's look at what is the market assumption for Tesla stock price. So the 30 analysts offering 12-month price forecast for Tesla Inc. have a median target of 733 with a high estimate of 1200 and a low estimate of 67. The median estimate represents a 4.6% increase from the last price of 701. Okay, so let's kind of jump back to ARK's price target for Tesla. Last year, ARK estimated that in 2024 Tesla share price would be 7,000 per share or 1,400 adjusted for its 5-for-1 stock split. Based on our updated research, we now estimate that it could be approached 3,000 in 2025. Again, to arrive to this forecast, ARK used a Monte Carlo model with 34 inputs, the high and low forecast incorporating 40,000 possible simulations. Our bull and bear price target are the top and the bottom quartile outcomes from simulations, as shown below. Now again, as we can see, their expected value that they predict that in 2025 Tesla share price could reach 3,000, which is again an astonishing gain which we are looking at. So as per today, the Tesla price at the time of recording is around 659. If you're looking at this, would be an increase of almost 500% on your investment. Again, that would be your return on investment in the next 5 years. And even if the Tesla, because again there is 25% chance that the Tesla price would be around 1,500, which is again their bear case, which again would show a 100% increase on your investment in the next 5 years. And their bull case, which comes around to be 4,000, which is almost a 600% increase on your investment, which is again also has probability of 25% for that to happen. As mentioned within their approach, they are using Monte Carlo model. Monte Carlo is a simulation model used to predict the probability of different outcomes when the intervention of random variables is present. Monte Carlo simulation helps to explain the impact of risk and uncertainty in the prediction and forecasting models. So what we are going to do is we're going to jump into their actual notebook that they have used in terms of getting to this price level. And as you can see that their expected price in 2025 is almost around 3,152, which obviously they have rounded back down, which is to 3,000. Their bear case comes to be 1,600, which they have rounded down to 1,500, and their bull case is 4,078, which they rounded down to 4,000. And as you can see, these are their key drivers, which again they also look at assumptions on balance sheet assumption, margin assumptions, insurance assumptions, ride hail assumptions, autonomous assumptions, and valuation assumptions. These are their 34 inputs that they have used in their Monte Carlo simulation. Again, within this, what they do is they are randomly simulating these data points from the minimum to the maximum, and they're coming through 5,000 simulation on the basis of which they're actually looking at what the price target looks like. And again, with looking at on their sheet itself, as you can see, the expected price of 2025, they're looking at 500 simulations, and they're looking at the average value of those 500 simulations, which comes out to be 3,000. In the bear case, they looks at the first quartile, and in the bull case, they're looking at the third quartile. In the paper, they have also mentioned that they're not looking at any assumptions to do with energy sector, and also looking at their solar. But as we all know, based on the plot we can see right now in front of us, like in their last quarterly report, Tesla also reported that solar retrofit and solar roof in 2020, solar deployment increased to 205 megawatt, 18% more than the prior year. The growth is the result of meaningful improvements to our solar retrofit strategy, including product specification, cost reduction, and industry-leading pricing. We have also made great progress growing our solar roof deployments as we have expanded the team while simultaneously improving our installation efficiency. So as you can see, the solar business is still growing again from starting from 2015. Now, as you can see, it has actually doubled and quadrupled in 2020, which we can see from their performance. And I do think solar will be one of the factors which will also impact the share price of Tesla in the coming future. And also looking at their next operating summary, where we're looking at the storage deployed in megawatts. And as you can see, that sector is also growing quarter by quarter, which again, it started on the quarter 4 2019 at 530 megawatt hours to 260 in the quarter 1. Quarter 2 we have 419, and then quarter 3 we have 759, which has doubled in the last quarter 4, which is of 2020. Again, let's see what Chamath has mentioned before on the energy sector for Tesla.
And here's what I would say, that he built a great car company, and somewhere along the way, about 5 or 6 years ago, what I thought he was building was an energy company, and that eventually people would realize that climate change actually mattered. And it's taken 5 or 6 years for everybody to realize the same thing, and he's being rewarded. The world's richest person should be somebody that's fixing and fighting climate change. I think the reality is that Tesla is a distributed energy business. Right? They are figuring out how to harness energy, how to store it, and then how to use it in a way to allow humans to be productive. Cars are a manifestation, but solar panels are as well, power walls are as well. And I'm telling you right now, Scott, the big disruption that's coming is to power utilities. There are trillions of dollars of bonds, of capex, of value sitting inside the energy generation infrastructure of the world that is going to go upside down. And when that goes pear-shaped, Tesla will double and triple again.
Okay, so let's kind of look at some of the recent trends that are coming out. Again, this plot on the left-hand side represents countries with the highest share of plug-in electric vehicles in new passenger car sales in 2020. Again, this also includes plug-in hybrids and light vehicles, and this also excludes commercial vehicles as mentioned on the below of the graph. And as you can see, the amount of vehicles sold in the United States, 2.3% of those vehicles were electric in 2020. And as you can see, Norway is kind of leading the pack at 74.8% of the cars sold in 2020 are electric vehicles. And as you can also see on the right hand side of the plot, which is again bestseller in Q1 2021, cumulative registration by days. Again, what we are looking at here is how the brands are actually performing against each other. And as you can see, the Tesla on the first month of January had a slower start, which was again, it was quite stationary, but again, as you can see, the growth was exponential, and it's actually leading the pack in the mid-February, where in the end of the February actually it moved toward the best selling car in 2021 quarter 1 in comparison to all the other brands.
Well, I expect to be CEO of Tesla for several years, I think there's still a lot that I'm super excited about doing, and I think it would be hard to leave a lot of these great projects halfway or partway done. So I do expect to be running a company for several years in the future. Now, obviously, nobody is or should be CEO forever. So I don't expect to be. It's like the sheer amount of work required to be CEO of Tesla is insane. I think I do probably more. Well, I definitely do more technical work than is typical for a CEO. So it would be nice to have a bit more free time on my hands. as opposed to just working day and night from when I wake up to when I go to sleep 7 days a week. It's pretty intense. But I think the mission isn't over yet, and we've still got a long way to go before we can really make a dent in the world on accelerating the advent of sustainable energy.
I don't ever give up. I mean, I'd have to be dead or completely incapacitated.
Let's look at a couple of key takeaways from ARC and West's research paper. For electric vehicles, first of all, since our 2024 analysis, we have increased our assumptions for Tesla capital efficiency. Previously, we estimated that Tesla would spend 11,000 to 16,000 per incremental unit of capacity in 2024. In 2019, Tesla spent 1.33 billion on capital expenditure and produced 509,737 vehicles, an increase of 144,505 vehicles from the previous year. Along with an additional year of growth added to our model, our forecast for Tesla's unit sales is between 5 and 10 million vehicles in 2025, which is, again, as they have mentioned, the 5 million refers to the bear case and 10 million refers to the bull case. Tesla introduced its insurance product in August 2019. Currently, it is available only in California. ARC believes that in next few years, Tesla could roll out its insurance offering to more states, underwriting its own insurance policies. Because the vehicle have better than average safety profiles, Tesla should be able to use real-time data to offer insurance in its vehicles, pricing it dynamically, lowering customer acquisition costs and increasing margins. In a bear case example, a ride-hail could add an additional $20 billion to Tesla's operating profit by 2025, increasing our price target by about $500. In preparation for its robotaxi service, Tesla could launch a human-driven ride-hail network first, delivering a highly profitable recurring revenue stream and limiting the downside of a failed autonomous service. A human-driven ride-hail service could boost Tesla's price target in ARC's bear case significantly. ARC assumed that Tesla's had a 30% chance of delivering fully autonomous driving in 5 years ended 2024. Now, ARC estimates that the profitability is 50% by 2025. Since our last forecast, neural networks have solved many complex problems previously considered unsolvable, increasing the profitability that robotaxis are viable. ARC estimates that Tesla's vehicle fleet gives it access to 30 to 40 million miles of data per day, up from 20 million per day last year. If successful, Tesla could scale its robotaxi service rapidly, allocating the additional cash in turn to manufacturing capacity, serving its autonomous network.
We believe now, as the reason we believe that artificial intelligence is ready for prime time, we've heard about it for years and years, and it's been great for science fiction. But until recently, until Amazon and Netflix started making suggestions for what we might like to buy or watch, and Apple launched facial recognition, until those goods and services came about, it didn't really affect our lives. So why do we think artificial intelligence is ready for prime time now? It's ready because we've taken the human programmer out of a large part of the equation. So we do a lot of work on autonomous vehicles, for example, and in autonomous vehicles, we know that a programmer cannot possibly imagine every permutation that might happen in terms of intersections and lane changing and so forth. Just not possible. However, you unleash big data and iterative algorithms and supercomputing power and just push those together. This is very hard for a human being to accept, but they will come up with better answers and can imagine many more permutations once we train them. And we just need to train them with data and algorithms and supercomputing power to reach an outcome that a human being does set. I'd like to get from point A to point B safely and as quickly as possible.
Let's kind of talk about what kind of chip is there in your car again, as people have also looked at the amount of data that's being stored into the data centers of Tesla and how the actual chip is working. In your car, the AI runs on a different computer than the Moloch that was used to train the network. Again, the difference in one scale, the Tesla FSD computer that runs in the AI fits behind the dashboard. It processes the input from the sensors in real time and decides on an appropriate action faster than a human can. We have also seen that Elon has mentioned in his recent tweets that Tesla AI, both hardware and software, is deeply underestimated. Again, if we kind of talk about more on the Dojo supercomputer, the Dojo supercomputer with all its supporting network and storage requires a data center in a building. The system that trains the neural nets can supply not gigabytes or terabytes, but petabytes or even exabytes of data to the neural net software and execute the training algorithm. There is no room for this amount of data or this kind of processing power in the FSD computer behind the car's dashboard. Only the rule distilled from it by the training computer are part of the trained neural net, the autopilot AI. So kind of let's look at the idea behind how the actual computer trains itself. So based on all the images and all the data that has been collected by all the cars on Tesla that are running on the road, that data is then get transferred to Tesla's network. Again, once it gets transferred to Tesla network, again, if we take an example of the new trend that is coming, which is again the Dojo supercomputer, again, that computer then will train the models based on all the input variables that comes out from the street view. Again, that data points then being used to predict the target in terms of where the car should move and how the car should move, and all that save model then is being transferred as a software as a service to the cars that are running on the road. And that's what kind of sits behind the dashboard. So basically when you're driving your Tesla car, basically when you look at the vision of where the car is going in the real time, that input data then is processed in that chip, and that chip based on the saved model, which was again the pre-trained model by Dojo or by the network that Tesla is currently using, based on that it takes an assumption of to turn left or right based on the direction you're moving towards. Just summarizing everything, so as we have gone through the ARK Invest paper, and we've also looked at what are the things that are coming on our way, and also the recent trends and recent update mentioned by Elon in the tweets. We've also looked at a couple of points being mentioned by Cathie. So I hope you enjoyed this video, and I'll see you in the next video. Peace out.